Hello, my name is Justin Haskins. Welcome to the show. Today we're going to be talking about the potential for a massive housing crash and potentially a massive economic crash. Could it be coming our way soon? Let's dive into the data and see what it shows us because numbers don't lie. Politicians lie. Numbers don't lie. Yeah, they can be twisted. They can be manipulated. But at the end of the day, numbers, they're more honest than politicians. They're more honest than campaign commercials. They're a heck of a lot more honest than what you'll see on most of your cable news networks. So we're going to dive into the data. We're going to do that soon. But before we get to the data, quick call to action. This is still a new channel. I'm still building it up, still building up the community here. I've been involved in all sorts of massive projects throughout my career, but I've never had my own YouTube channel. So if you could like this video, subscribe to this channel, leave a comment, I would greatly appreciate it because all of those actions are going to help break through big tech algorithms that keep content like this from reaching more people. So the more you like these videos, the more you leave comments, the more you subscribe to the channel, the more other people are going to see this content. So I would, if you could just take a moment, doesn't cost anything at all, just a little bit of your time to please perform those actions, it would mean a lot to me. All right, let's get to the data itself. We're talking housing market. What is going on with housing prices? What is going on with interest rates? What can we expect to see over the next 12 months or so? The data tells a very, very interesting story. This right here is a chart from the Federal Reserve Bank of St. Louis. And what it shows us is the average sales price of houses sold in the United States. Now, what's really interesting about this is that you can see for a great number of years. Here we have, if you're watching the video version of the show here, you can see that housing prices increased pretty dramatically throughout the 1990s. And then in the early 2000s, they started going up at a much more rapid pace. And then beginning around the second quarter of 2007, prices started to decline. This was the beginning of the Great Recession period that a lot of you who are watching this video probably remember. The Great Recession began sometime 2007, 2008. Housing markets started crashing. That triggered all sorts of other problems with the financial system, which led to one of the biggest recessions that we've had in decades. All right. So housing prices had jumped up first quarter of 2007 all the way to $322,100 for the average sales price of a home. That was a massive increase in prices. We're talking about over a 5-year period. It jumped up by, almost about $100,000 in just 5 years. So massive increase in housing prices. That led to a massive decline from the first quarter 2007 all the way to first quarter of 2009. Housing prices dropped by, about $70,000 or so, somewhere in that range, in a fairly short period of time. So a very large, very rapid decline in housing prices, which triggered all sorts of other things. And housing prices basically went sideways for several years as the economy was recovering from that crash. And then beginning around the end of start of 2012, we saw housing prices increase, and they started increasing rapidly. They jumped up past where the housing prices had been in 2007. By fourth quarter 2014, we were up to $369,400 for the average sales price. And then they kind of went sideways for a little while. During the Trump period, we saw some steady growth during the Trump era, but we didn't see anything crazy. Then we get to 2020, and we see one of the sharpest, actually, it's the sharpest increase in housing prices in the history of the United States of America. It happened in 2020. Now, what else happened in 2020? Well, I think we all remember. This is a little thing called COVID-19. Global pandemic, massive, massive government programs, huge amounts of printing of money from the Federal Reserve, from the European Central Bank and other central banks. And even though we had huge lockdowns, millions of jobs lost, lots of panic and fear, tons of people dying all over the world, millions of people ended up dying from COVID-19. Despite all of those problems, supply chain disruptions and all of that, the cost of housing dramatically and sharply increased. All right. We went from $374,000, almost $375,000 in the second quarter of 2020, all the way up to a high of $552,000. That is an increase of what? 180 something thousand dollars. I'm not very good at math. It was an increase, almost $200,000 increase in just 2 years. So 2-year period of time, we see a $180,000 or so increase in the cost of a house, of buying a house. Now, that's the fastest, sharpest increase in housing prices that we've ever seen. Normally, when you see sharp increases in housing prices like what we're seeing here, you eventually see a very steep correction, because this doesn't happen with normal, in a well-functioning market where people are making decisions that actually make sense. You don't see housing prices jump up like this. This only happens because of distortions in the marketplace, and distortions are eventually corrected, and those corrections are usually ugly. Okay, so beginning in the first quarter of 2023, we started to see some of these sharp. We started to see a beginning of a correction. We went from $552,000 in fourth quarter of 2022 down to $505,000 in the first quarter of 2023. So about a $50,000 decline in the average housing prices in just one quarter. And then it dropped a little bit more, and then it went up a little bit, and then it dropped even lower down to below $500,000. This is by the end of 2023. And then we get to the first quarter of 2024, and they start creeping back up again, but not by a ton, $513,000, but still down from the fourth quarter of 2022. Now, these prices, this is a sharp decline. This is one of the steepest declines in housing prices that we've seen in American history as well. So, massive increase in housing prices, sharp decline in housing prices. But you might be thinking, okay, but the decline in housing prices we've seen, that hasn't come anywhere near erasing the increase that we saw from 2020 when we had $375,000 homes on average being sold, all the way up to $552,000 just 2 years later. We haven't seen that correction happen. Now, we may not see that correction ever happen. Maybe housing prices just stay high. It's possible. But you have to be at least a little worried just from this one chart alone, because never in history have we seen housing prices go up quickly like this and then not fall back down to where they were before, or close to where they were before, or at least a huge, massive 20, 30% or more correction. We really haven't seen that yet. We've seen a 10% correction, and and then it creeped back up again. So we haven't even had a 10% correction in housing prices. So housing prices, it seems, just by looking at the rapid rate of increase and the decline, like there could be an even greater correction in our future. But this chart, as many questions as it raises, is not really the reason why I wanted to write this video or make this video. The reason I wanted to record the video is because of a different chart. This is a chart from Long-Term Trends. It's a great website, by the way. And this chart looks at home prices relative to median household income. All right. So it's the ratio of your average, it's a median home price to, it's the average home price relative to the median household income. Okay. So the average home price to the median household income. So what this is trying to show is about how much money does a home cost relative to how much money people are earning. Okay, so this takes into account people's income levels. unlike just looking at a chart that shows you just the average price of a home, but it doesn't really tell you anything about how that compares to what people are making. What this shows is, in my opinion, this shows that if you're going to make an argument, if you're going to show one chart that seems to illustrate most clearly that we're in a lot of trouble, I think it's this one. All right. So what it shows is this. Since Joe Biden has been president, so beginning around, let's see, we can go back to January or so, 2021. All right, so January 2021, when he became president, the average cost of a home was about 6 times greater than what the average person, the median household income. Okay. So the median income in America, you'd have to make that's about 6 times that income amounts to the average cost of a house. All right. Through most of the Biden and most of the Obama years and most of the Trump years, it was between 4 and 5 times that rate. In other words, during Obama's presidency and Trump's presidency, the average cost of a home was about 4 times greater or 5 times greater than the median income. By the time you get to Joe Biden, it's around 6 times. So it's already started to creep up. But then Joe Biden becomes president here. And as you can see on the chart, if you're watching the YouTube version of the show, it sharply increases faster than we've seen at really any other point in American history. Okay. You can see this from the chart. This chart goes all the way back to prior to, let's see, what's the earliest year? 1946 is the earliest year in this chart. And we've never seen anything like this crazy increase that's going on here in 2021 into 2022. So it went from about 6 times the ratio, up over 7% to 7.34%, or 7.34 is the ratio, rather, not percent. So what that means is that in 2022, spring 2022, the average price of a home was 7 times greater than what the median income was. And just a couple years earlier, just a year earlier or so, it was 6 times greater. So we went from, and just a couple years before that, it was 5 times greater. So we went from 5 times, the average price of a home is 5 times greater than what the median household is earning, to 7 times greater in just a couple of years. Okay? Very, very, very short period of time. Rapid increase in housing prices, right? Then it starts to dip a little bit, but for the most part, it stays up. It stays above 7, and it dips just slightly. We're talking about 1/10 of a point here, and then it starts increasing again in early 2023, and it's been pretty rapid since early 2023. The most recent data we have is the end of January 2024, and it's up to 7.64 times greater. Now, all of these numbers, once we cross over, 7, basically 7, the ratio number here, all of these numbers are records that we've never seen before. As you can see on this chart, we've never seen the number cross 7. And it's been over 7, and it's on its way right now. It's on a trajectory to reach 8 times greater within the next year or so. And we've never seen 7 before, not even for a single month. We've never seen 7. It's now it's now on the way to being 8. And just a few years ago, it was 5. So what this is illustrating is not just that housing prices are going up, but that housing prices are going up way, way faster than income levels are going up. Now, this isn't just a problem for people in the sense that they can't afford a home. What it's illustrating, and that is a massive issue to be sure, but what it's illustrating is that the housing market, that there is a massive problem, a massive distortion that's occurring in the housing market. because you should never see housing prices increase like this in a normal, well-functioning marketplace relative to what income. Now, if income was skyrocketing, then housing prices skyrocketing isn't that surprising. But income is going up, but it's not skyrocketing, and housing prices are skyrocketing, and that's why you're seeing this sharp increase beginning in 2020 all the way up to here. Now, what is the cause of this? What is the cause of this? Well, I don't think it's a coincidence that you start to see this rapid increase in the cost of housing, the cost of buying a home relative to what people are earning in 2020. You start to see the early stages of it in 2020, and then it gets much, much worse when Joe Biden becomes president. I don't think it's shocking that this is going on, knowing now what occurred during those years with our central banks, with inflation, and with all of the massive government programs that were created by the Biden administration. When COVID occurred and the lockdown started, the U.S. Federal Reserve came in and they basically said to Congress, to Democrats who were running Congress at the time, and President Trump, and then later they said the same thing to President Biden when he took over, just do whatever you want to do and we'll pay for it. Don't worry about it. Just do whatever you want to do and we'll pay for it. Interest rates plummeted. The Fed turned on the money printing, gave permission for the federal government to basically spend any amount of money they wanted, and the federal government spent trillions and trillions and trillions and trillions of dollars more than they previously had. And the Fed kept interest rates at basically zero, all the way down, dirt cheap, right, to get access to capital. And that caused, unsurprisingly, a spike in prices across the board. Because now you have trillions of dollars entering the marketplace, but you have, relatively speaking, the same number of products and services out there in the world. In fact, when they started printing massive amounts of money in 2020, they were also simultaneously shutting the economy down. So normally inflation occurs when you have too many dollars chasing too few goods and services. In this case, we had lots more dollars being pumped into the economy, and we had a restriction on the goods and services that were being created. So we had fewer goods and services and more money coming into the economy. That is a recipe for disaster, which is why so many common sense people said during this period of time in 2020 and early 2021, there's going to be massive inflation. This is going to be a huge crisis. And the Federal Reserve and Joe Biden and Democrats generally scoffed at it and said, no way. Inflation is transitory. It's temporary. That's what transitory means. Temporary. It's going to go away. Don't worry about it. This is all about turning the economy back on, supply chain problems. Then it was war in Europe. Has nothing to do with any of these other macroeconomic problems or monetary issues or anything like that. And then, of course, the inflation didn't go away. It got worse. It got worse and worse and worse and worse and worse. And instead of enacting policies that tried to correct all of the huge errors that had been made in the past, the Biden administration just spent even more money. They spent massive amounts of money. They kept spending high. They did decrease spending compared to the height of the COVID pandemic, but they continued to spend way more money than had been spent prior to the COVID-19 pandemic and the lockdowns. And the Federal Reserve, they did increase interest rates, but as I'll show you soon, they didn't increase interest rates anywhere near to the level that they had in previous eras when they were trying to deal with the inflation problem, because they knew that if they increased interest rates too high, too fast, it was going to crash the economy and cause all sorts of problems globally. And they didn't want to do that. So instead, they tried to take a more measured approach by increasing interest rates really rapidly, but not to the level that they had been previously. Nowhere near the level we had seen in previous decades. So even though people think interest rates are really high right now, they're actually in line with the average for a lot of periods of American history. They're really not that high. It's just people are used to interest rates being really low because that had become the new normal. Because the Fed was acting completely irresponsibly, And so was the federal government, both under this president and the last president and the president before that and the president before that. All of them had acted completely irresponsibly. And in some cases, Congress went along for the ride. In some cases, Congress was the one driving the increase in spending. So what does all this mean for housing prices? Before we get to sort of why I think this is going to trigger a crash, although it may be obvious to you already, I want to pull up this chart. This is the 30-year fixed rate mortgage average in the United States. So this is the mortgage rate that people are paying. So I already showed you in the previous chart how the cost of a home is skyrocketing compared to what people are earning. But that's only part of the cost of buying a home. When you buy a home, the two biggest factors for how much money you're going to spend on the home is the price that you paid for the house and then the interest rate. So if interest rates are really low, say 1%, 2%, 3%, and you buy a home for, say, $500,000, you're paying a lot less than if you bought the same home for $500,000, but your interest rate was 6% or 7% or whatever, right? Because the interest rate is a huge component in what you're going to pay over the life of a 30-year mortgage and a huge component in your monthly mortgage payment, okay? So what we're seeing now is not that scenario that I just explained, where you have mortgage rates going up, but housing prices staying the same. Housing prices are skyrocketing, especially compared to what people are earning. And as you see on this chart here, mortgage rates have also dramatically increased. So people are not only paying more for the price, they're also paying more in the mortgage rate. And so the average cost of buying a home is significantly more expensive than it had been before. We're seeing huge increases in monthly payments that people are paying. Again, making it much harder for people to buy a home, but also illustrating that this is not a sustainable situation. We shouldn't be seeing historically high increases in terms of both the total amount that we're seeing and also the rate at which we're seeing the increases in housing prices, coupled with rapid increases in mortgage rates. Those two things shouldn't be happening at the same time. Not really. I mean, not unless you're about to have a huge crisis of some kind. There's got to be some kind of massive distortion that would allow for those two things to happen at the same time. And that is exactly what's going on here. As recently as, mid 2021, we were seeing mortgage rates on average below 3%. Even into late 2021, still around 3%. And then starting in 2022, it jumps up 3.89% in February, 4.42% in March, 5.51% in July, jumps up to almost 7% in October of 2022. And now November 2023, it's over 7, then it drops down below 7, and now it's somewhere around 7%. Okay, this is a huge, we're talking about 5 percentage point increases, 4 to 5 percentage point increases over just a couple of years, coupled with average housing prices that have jumped up by over $150,000 on average. So we're seeing huge increases in prices, especially when you compare to what people are earning in income, coupled with huge increases in mortgage rates. Now, in the past, when we've seen rapid increases happen in mortgage prices, rapid increases in housing prices, even without mortgage rate increases like what we've seen recently here, we've seen massive crashes immediately follow. So let's go back to that chart that we talked about before, home price to median household income ratio, and look at what we see here in January 2006 into February 2006. We see the average home price skyrocketing, reaching a crescendo relative to household income, and then we see a steep decline, and this is the beginning of the Great Recession. And we go in early 2006, housing prices were about 6.8 or so times higher than the median household income. And then by 2012, just a handful of years later, it had plummeted all the way down to sub 5. And really, the decline went from 6.8 or so down to the low 5s just in a couple of years, 2 to 3 years. And this coincided with a massive financial and economic crash. Housing prices are consistently one of the best indicators to look at when you're looking for warning signs about financial and economic crashes, because they're such a huge part of the economy. They affect so many other parts of the economy, and they're a sign generally of people, of economies overheating, or their massive distortions in the economy, or massive distortions and errors in monetary policy. You can usually see that in housing prices more so than in other things. And that is exactly what we're seeing right now. So if we see a correction like the one we saw in 2006 down to, to say 2009 into 2012, if we see something like that today, we're talking about housing prices crashing by, say, $100,000 on average. We're talking about people paying mortgage rates that are while people are paying mortgage rates that are 7 times the average household income, 7 percentage points, right? Or 7 times. Yeah, mortgage rates that are 7 percentage points. That's right. 7 percentage points. Sorry, I'm getting all these numbers confused. Mortgage rates that are around 7%, while housing prices are crashing by $100,000 or more. Okay? That's not even what we saw during the Great Recession. During the Great Recession, although housing prices crashed, the government significantly reduced, you can see it right here, the average interest rate over that same period of time. So people were paying 5-6% for mortgages when the skyrocketing housing bubble was occurring. People were paying 5-6% for their mortgage rates. And then when the crash happened, the government and the Federal Reserve responded by decreasing mortgage rates dramatically down to the 3s. And they pretty much stayed low ever since then, right? So, and I think that's been a huge problem, because that's a distortion that the Federal Reserve created in the economy. You shouldn't have mortgage rates that low. That doesn't make sense. And that has led to a lot of the other problems that we've seen throughout the economy. So all this is to say, there are serious warning signs here. We have never seen the kind of increase in housing prices that we've seen recently, coupled with increases in mortgage rates. We've never seen it. And if the housing market starts to crash and people are locked into these high rate mortgages and they can't get out from the mortgages because nobody's going to want them, right? And they have no way of selling their home because they're underwater. They owe a lot more in their mortgage than they will get back when they sell the home. And they're locked into these rates at 7%, 8% that they can't afford to pay. You're going to see a lot of people lose their butts. A lot of people are going to be in really bad shape as a result of this. This is incredibly dangerous. This is an incredibly dangerous time. Now, it is possible. I want to preface all of this by saying it is possible that perhaps we don't ever see that massive, or not, I shouldn't say we won't ever see it. Eventually, we will see a massive housing crash. That's inevitable. But it's possible it won't happen anytime soon. It's possible that all these crazy numbers that I've been showing you here are, this is the worst of it. And the reason I say it's possible is because in American history, we've never seen the kind of money printing that we've seen in recent years. We've never seen the kinds of distortions that we've seen in recent years. We've never seen the kinds of manipulation from the Federal Reserve, not to the degree that we've been seeing recently. We've never seen that. We've never seen COVID lockdown-like things happen, not in modern American history. And so, because there's been so much money pumped into the economy, and because so many weird things have happened with mortgage rates and housing prices and all of this crazy stuff and supply chain issues and war in Europe, it's possible that there's just so many crazy things going on that it's making the numbers look as though a massive crash is about to happen, when in reality, a massive crash isn't about to happen. You could have said a year ago and I did say a year ago, hey, look, the numbers seem to suggest a massive crash is about to happen, and it didn't happen. We saw a little correction in the housing prices. We've seen we've definitely had economic problems, but we haven't seen a gigantic crash or anything like that. Overall, the job market's still pretty strong. We're not seeing any signs that there's massive layoffs coming or anything like that. There have been declines in full-time jobs. We have seen some problems. More and more people are working part-time. The cost of everything is too high. People are struggling. No doubt about it. People can't afford to buy a home. But those are not catastrophic problems in and of themselves. Unless, of course, you're one of those people that can't afford to buy a home or you just lost your full-time job. But they're not catastrophic problems from a macroeconomic level. But it does look like we're about to experience that. And so my advice to you would be to prepare. That would be my advice. Don't carry lots of debt. Don't carry especially high interest debt. Diversify your investments. Don't put all your eggs in one basket. Use common sense. And for the love of God, don't buy a home that you can't afford right now. Don't buy a home that you can't afford, because all signs are pointing towards something very bad happening in the near future. And maybe it never happens. Lots of people make predictions and they're wrong all the time. Maybe it won't happen. But if it does, it really won't be a surprise based on the numbers that we've seen so far. Okay, enough happy news, right? Too much happy news today. Okay. Thanks for watching the show. My name is Justin Haskins. Again, please, you can help out this channel by liking this video, leaving a comment. Tell me what you think is going to happen in the housing market. I read all the comments that are left beneath these videos, or I tried to anyway. So tell me, I want to hear from you. I want to hear from the audience. What do you think is going to happen with the housing market? Are you worried about it? Are you not worried about it? Have you seen anything crazy going on in your local neighborhood, in your local town, in your state? Leave a comment, like this video. Please subscribe to this channel. All of these things are going to help more people see this content, and they need to see this content because people have to prepare. There's nothing wrong with preparing. Okay, I'm not saying you should sell everything you have and move out to the middle of the woods somewhere. Not that it's necessarily the worst idea in the world, but I'm not suggesting you go crazy. But you got to be prepared. Now is not the time to be taking massive economic financial risks. You got to be careful because we're headed for serious times and more people need to hear this message. So you can help more people hear this message by liking the video, leaving a comment, subscribing to the channel. All right, until next time, my name is Justin Haskins. Thank you for watching. Please, as always, stay free.